Okay, what's up, fail-safe investors? What's up, fail-safe family? This is a video where I'm going to give you my opinion on the company Snowflake and the stock and the craziest IPO for any software company in the history of the stock market. So stay tuned. This is going to be a good one, or as good as I can make it. But let's go. Let's go. Okay, so Snowflake, ticker symbol SNOW, it IPO'd in September 18th. So this company just went public and had the craziest IPO in pretty much a long time, probably the history of the stock market. So this company before IPO was probably going to have a valuation of around $12 billion market cap, which would have made the price come out around like 70 to 80 bucks a share, right? But right before the IPO, like the day of an IPO, they were like, no, we're gonna IPO at like $120 a share. So if you look at it, might say that some charts might say the company IPO'd at 120, and some charts might say the stock IPO'd at 240. Now, literally by the time that I looked at the stock, it was already up to like 275, 276, and reached all the way up to like $300 a share before you even knew it. Now, what drove this stock to that price? Who knows? The stock market is crazy and it does its own thing when it wants to. So pretty much, I like to look at the balance sheet, the financial statements, get a fundamental analysis of the company, see what they do, how they make money, how they spending money, the cash flow statement, all of that before I make a judgment on any company. But this company just went public, so all that information isn't available yet. Now, they did file with the SEC, what the company do, and all that stuff, but everything isn't in that filing. So I'm gonna wait till the 10K come out and see how this company fared on the open market. Now, what I did find out about the company is before they went public, they had some initial investors, one of them being Warren Buffett himself, or Berkshire Hathaway. I don't want to confuse the two because a lot of people see Berkshire Hathaway pretty much investing into a company and they automatically just go with Warren Buffett investing into this company. So Berkshire Hathaway did invest about 200 or something million into the company before it went public, when the stock price was at $120 a share, and pretty much within minutes or seconds, his money doubled. Like easily. Now, any company that runs up that fast, I don't care if it's IPO or if it's been on the market for 10, 20 years, any company that pretty much doubles its stock price within a short period is doomed to fail just as quickly. Now, I know a lot of people are going to give me those exemptions like, well, look at Tesla, went from like $200 a share to like $2,000 a share within 1 year, and it's still holding. That is true. There is always an exemption to every rule, but it's better to be safe than sorry. History has proven that almost any stock that runs up that fast, especially with nothing to prove that it has or nothing to sustain that price point, usually goes down just as fast. Look at Nikola, for example. Nikola was up to like 90 bucks a share, and now it's at 30, and it was not that long from 90 to 30. It was like that almost. But what we do know about Snowflake is there are cloud computing software or cloud data software, not only where companies can store their data, but companies can also pretty much share their data with other third parties without having to pull it from the cloud or move it into like another file or anything like that. So it's like real-time analytics. Pretty much this can be game changing, but I myself like to follow the rules of Warren Buffett, meaning the company has to have cash flow before I invest in it, has a proven track record of history. Now, it is speculative. I do see this company with the service that it provides being around for a very long time, being a hot stock, but I just got to see more from this company. I can't just go off of cloud computing and it has a really solid product. Now, that is good, and a lot of major investors, or major companies I should say, are pretty much working with Snowflake, the company, and using their service, because pretty much within 1 year their revenue did pretty much double. So it went from like $104 million of revenue to like 200 or something million dollars of revenue. But they also spent like $180 million to, get that revenue pretty much. So they had 171 million net loss on the company or something around that number. It was pretty high. It was more than what they brought in. They have a lot of money, so they're spending more money than they are making, and that is just a fact that is from them themselves. So you got to look out for companies like that. Now, it is in the growth stages. And like I say, company in the growth stages will usually be in debt and spend more than they bring in. And you just have to kind of have faith in the company's business model and what they possibly could do in the future. I mean, I invest in Uber. Who am I to tell you not to invest in a company like this? But it's all at your discretion. You are the investor. I just say be careful, do your research. If you do want to invest in a company like this, be very skeptical. It doesn't hurt to be skeptical. And not only that, this company also have shares within 90 days that will add to the shares that they already have outstanding, which will cause share dilution. And share dilution means that the more shares that are on the market, the lower the share price will go because you'll have more supply than demand. That's my take on Snowflake. Like I said, it doesn't hurt to be skeptical. Always be worried of companies that stock price grow much quicker than the company itself. I mean, like I said, the company was supposed to come out at a $12 billion valuation for the market cap, and now they're sitting at a $66 billion market cap, and that is huge for any company. That's even bigger than Uber, my company that I invest in. Like Uber's sitting at like 50 billion or 60 billion, and Snowflake, which just came out, is at 66 billion. Now, I'm not saying that this company can't get to that evaluation, with the revenue and profits and all that, but I'm just saying it's not there now. So sometimes just wait, see what the company show you, see if they can match that valuation. But that's just my take on this company. Hit the like button if you like it. If you're new to my channel, hit the subscribe button, share the video, it'll help me out. And let's get it, let's do it.